Welcome to Behind the Deal, where we'll be exploring unscripted, candid, first-hand experiences about the wild successes and cautionary tales of professional investors, founders, consultants, and advisors as they share their stories in deal making. Matthew Paine, he is the co-founder of LifeCap. He's got a pretty lengthy background in capital raising. Matthew, thank you for joining me today, man. I appreciate it. I saw that you've got a lot of experience in the capital raising space. You and I met last week at the Family Office Club event in Dallas. I remember you talking about you'd raised, I think, a total of $3 billion in your career. That's a pretty astronomical number. I saw you did 8 years early on at AXA Advisors. Looked like you got a stint at RQ Capital, and now you've got your own thing going on. Tell us a little bit about yourself. Tell us a little bit about your background.
Sure. Well, thanks for having me, James. I appreciate it. It was great meeting you last week, and always open and enjoy when I can talk to people about the capital raising environment and kind of almost peeling back the curtain a little bit to look at, what it really takes to raise capital. And I'll be the first one to admit it that I don't have it all down. And it's, I'm not perfect at this. And every day I'm learning something, and I'm, stealing from the best and assimilating that. So I think that's kind of my first little thing that I always say to people is I don't have it down. I'm still learning.
Yeah.
And I think you need to be open to that as you're doing a capital raise, is to be constantly saying, I got to improve on this a little bit and constantly do that. So, I've, been fortunate in a great career. Started, before in the financial services, was a marketing guy. And I think that actually created such a great foundation. So I was a marketing and advertising agency, and I was an account manager. I can't draw to save my life. So I was on the account management side, but I think that really created this strong foundation for me of understanding that it isn't about me, my message out. It's how people are receiving my message. And are they receiving what I am trying to get across in a way that resonates with them? It's not about me. It's about them. And that started as a marketing and advertising person.
It totally is.
Yeah, that translated. Then I got into the financial services and built a financial practice and did financial insurance and all that, and sold that, and really started to get into this thing called alternative assets, in the mid 2000s, and really kind of full time in '08. And that's really what I've been doing since then with a couple of different firms, and then co-founding the current firm that I have right now, LifeCap, is really working with alternative assets, educating people about what really it is, and helping firms that looking to raise capital for their respective asset classes and missions centered around the alternative asset space.
That's awesome. And, that definitely speaks to me as well as being, I'm a marketer as well. And I've also got, my network and who I serve primarily is the financial service industry. So we have that kinship there. So I can absolutely appreciate that sentiment about it's not about your brand or you, it's about who you're serving. And I think that message was also very prevalent in the mastermind that you and I were a part of too, which I love. So I can definitely appreciate that sentiment there. So let's get to it. Tell me a story.
There's a lot of stories. As somebody who's been in this business for many, many years, I have stories that could spend days and weeks and months on. But what I always like to kind of talk a little bit about with capital raising, but more so in anything related to success in the sales aspect of it, and even success in business, is that 90% of the success that we see are the things that we are doing before and after that specific event. If it's sales, it's standing in front of the room and giving your pitch, right? Or sitting across the table and, trying to get that deal done. That's such a minimal or minuscule amount of time that you really are spending in your professional career to be successful. And a great analogy on that is professional sports. And let me kind of touch upon professional football now, to be clear, I'm not a football player, so I'm an avid fan and love the sport, but not a football player. But I think I read somewhere, and I might be off by a minute or two, so someone could fact check me and kind of get exactly. But
Sure.
if you look at all of the time, if you add up all the time between the moment the ball is snapped to start the play and the moment that the referee whistles the play dead. So that's a very short period of time.
Yep.
In some cases, just a couple of seconds. If the
Yep.
play draws out, it's, maybe a little bit longer. But so that's the actual playing time,
Yep.
right? So in a football game of 4 quarters, it's actually only about 11 to 12, maybe 13 minutes, kind of right in that range of actual playing time. So if you think about that, they're playing for 12 minutes. I'm just going to use the number 12 because it's in the middle.
Yep.
12 minutes. Now, break that down even further. Although it never happens this way, but let's just pretend that offense had the ball for 50% of the time and defense had the ball for 50. So now it's 6 minutes.
Yep.
So now that player is making the plays, assuming they have every play on offense or defense.
Right.
There's 6 minutes.
Yep.
Minutes.
Wow.
And they're obviously compensated an incredible amount of money, fan bases and performing at the highest levels.
Yeah.
But the argument is that it's not because of the 6 minutes. It's because the countless hours,
Yeah.
the countless days, months, years that they took to get themselves to that level, to the highest level, that you can achieve. The full focus on everything about their life, from the nutrition to the things that they eat on a daily basis, to their sleep habits, to the things that they do to keep their bodies in the shape that they need to keep their bodies in. Then go to the practice field and the countless hours of just doing that one little thing over and over again ad nauseum. I mean, can you imagine how many times that repetition of snapping the ball happens?
Yep.
I mean, it's got to be tens of thousands, right?
Yeah.
Just for that one little extra edge.
Yeah.
And then gain film, right? Now
Yep.
you're learning about your competitors and what
Yep.
are they doing. And so you add up all of that, and that's what creates the success. Now, translate that into our professional careers. We're asked to perform at a very high level, as professionals, as successful professionals, but we're now asked to do it not for 4 years, 5 years, 6 years, or, hopefully maybe a 10-year playing career. Now you're asked to do this for 20 years or 30 years, right? And you're asked to not do this for 6 minutes a day, but you're asked to do this for hopefully multiple meetings a day, 5 days a week, maybe 6 days a week. Like that's a whole different mindset, but you got to start translating a lot of what I just did from my analogy into that, which is you got to constantly be practicing. You got to constantly be rehearsing your pitch, the thing you're doing up on stage, that presentation that you're giving to the client. It's kind of funny. I'm an avid runner. I do enjoy jogging, and the looks I probably get, because to other people, they see some crazy guy jogging down the street with his arms flailing, pointing. But to me, I'm not jogging. I'm sitting in front of an audience presenting something, or I'm giving my sales pitch, or I'm doing. So in my mind, I'm not on this road or the sidewalk jogging. I'm practicing and I'm rehearsing.
Yep.
Others may see something different.
Yeah.
So far, nobody's called the police on me yet, but it's this crazy person running down the street.
Right.
But after even 25 or 30 years of selling, I constantly am rehearsing and practicing.
Yep.
On the flip side, it is prevalent. It is absolutely clear when someone steps on stage, does their presentation, when someone is sitting in a room and giving their pitch and they're unprepared. They came in, they just, I do this a million times, I'm good, and they come rolling in. You can tell they're disheveled. You can tell they're not organized. And my clients deserve better. Your clients deserve better. They deserve the best that we can bring them. And that means we need to properly prepare and practice and continue to hone our skills so that we are delivering the best that we are
Yeah.
every time that we have the opportunity to do that. I
Yeah.
hate that phrase. You can't teach an old dog new tricks. I don't agree with that. I think you can always teach somebody new tricks, and I think it should be a passion to continue to practice and
I think
prepare.
so. I think so as well. If you've got an open mind for it, yeah, I think so. I think, to your point about the analogy between football and business and what we do, especially like in capital raising, um, I think too that's almost any sort of vocation or professional role or job where you're not exactly compensated for what you do. It's how long you've done it. You're paid for your experience and for who you are. You know what I mean? I think that's what separates someone who's entry level to someone who's famous, right? Who's known for something. Like if you were Warren Buffett or Carl Icahn or something like that, to stay in the finance lane, you're they would be summoned or asked to advise because of who they are and their experience, not necessarily the actual time or the advice they're going to give necessarily. I think there is a fine line there for sure. I
Sure.
agree. I agree. It's like even as a marketer, I can do things or execute certain strategies or tactics way faster than others might be able to. And it's not necessarily because I'm so much better. It's just really the experience that I've got,
Exactly.
all the time behind me. And it's like, I can break down the strategy that would make sense for you in minutes and not have to go and search and look through books and have to, use AI to come up with it and all that kind of stuff. So no, yeah,
Sure.
I think you're spot on with that for sure.
You've learned from the past too, so
Yeah,
you've been able
yeah,
to incorporate that into
yeah,
moving forward to quickly execute on
yeah.
something and move forward for your client. I think that's critically important.
Especially learning the hard way, from failing or
Yes.
missing the target. I think that is definitely one of the best teachers. I agree completely. When you screw up and it hurts, you learn pretty fast, especially if anyone else
Also,
is involved.
I think it's critically important. Now, Ray Dalio, if you're speaking of finance, there's Ray Dalio, of course, in the Bridgewater, of course, his company, and then his book, famous book, Principles. There's a part in that book that really talks about, which is this getting to be comfortable with being uncomfortable. And what he's referring to, at least the way I'm interpreting it, I think everybody's got their interpretations, is that you get to the point where you seek out those things that you're not doing well, and you start to yearn for seeking out why there was a failure or why there was a misstep and how you can improve on that. What a great tool if you can get over the um, the human nature of saying I don't like negative feedback and I don't, like if you can get over that
Yeah,
and start embracing it, you actually start to yearn for it. You're
yeah,
like, I'm okay with the things that I do well. I want to find out all the things that I'm not doing well. And
right.
I got to start focusing more on that. What a, it was such a mind blowing experience for me when I started to embrace that. Me personally, in my relationships, in my professional world, all of that started to just get better and open up when I was willing to say, hey, I got to embrace those failures and really start to look at them and yearn to learn about them and more about them and prove.
Was there ever? Do you think is there any particular experience you've had that comes to mind where it was there was some negative feedback and you were able to kind of overcome that or kind of
Yeah, I think I'm glad that you asked that question. Thank you. I remember, I was managing this team and my boss, the person I reported to, came back to me and said, hey, the team, I'm getting information from the team that you're being very rigid. You're being the interpretation is that you're being inflexible and you're being rigid and you're being too firm. And they use the term you're being too military-ish because I was in the Army. And it started to dawn on me that I was like, well, wait a minute. It isn't about, again, kind of what I started this podcast on, which is it wasn't about what I'm trying to deliver. It's about how it's being received. And it was clear that my technique and style was not resonating with the team that I'm being asked to manage. So now I have two choices to make, right? I can say, nope, team, you have to adjust to me. Well, that's not going to work, right? if
Yeah.
i if I got to ask 8, 10, 12, whatever amount of people to just change to my style, well, that's a losing proposition. And so I really so I requested from my boss to have kind of sessions where I could start working on, the way I delivered information, the way that I was speaking to them, just all the facets of my communication with my team. And it started to unlock um, more of what I felt like I was doing, which was empathy, but it wasn't coming across as empathy. It was coming across as too tough. That was a time that really transformed me into wanting to find out, well, what else am I doing that is, you know,
Yeah.
being viewed in a negative manner.
Yeah.
But that one was really, really impactful to me. And it still reminds me to this day that the most successful people that I've met, and I mean, I have worked with the hundreds of millionaires, I've worked with billionaires, and the ones that are really successful still have that little bit of element to say, you know what, there are things that I don't know, and I'm okay with learning, and I'm okay with,
Yeah.
keeping it improving.
I think that probably comes with the experience and probably, just maturity. I think, I mean, you tell me, have you noticed any difference between folks that have just kind of started raising capital and those that have raised a lot like yourself, like how they treat that and how they kind of respond to that kind of feedback?
Yeah, I think it's when you're beginning to raise capital, you kind of have this, you want to prove yourself. And I appreciate that. And I still want to do that. And so a lot of times you tend to be a little bit more stubborn in your path, in your delivery and what you're doing, the materials you're creating, your style that you're using. You tend to be, because you're trying to prove yourself and you're trying to say, I belong in the room, and I know what I'm talking about. And then as you get more experience, you start understanding the power of vulnerability. You start understanding the power that it's okay to be vulnerable. It's okay to say, you know what, that's a great question. And I don't know the answer to that, but but let me circle back and I'll get back to you.
Yeah.
It's okay to say, you know what, I've misstepped there too. And like, there's this power of experience that creates your willingness to be vulnerable that you just don't have when you're kind of first starting out in that capital raise, um, that I think is such a critical. And I think also there is a little bit to of the lessons learned of, I know, I'm confident that I'll be successful in my endeavors as a capital raise. It doesn't mean that I won't have failures, because there's always going to be, you try this, it didn't work. You pivot, you
Yeah.
try this, it didn't work. But I'm confident that given enough time in the right framework that we will be successful. We're just going to have to figure that out, and it's okay. Then you're much more open to fail. You're much more open to try and fail, tweak it, keep going, versus when you're starting out and you fail, it just hits you so much harder, and you're just so worried, is that going to be my demise or the end of my project?
Yeah, that definitely reminds me of a lot of things I've read over the years. I mean, sociology is something I studied. It's almost like my minor, if you will. It's something I continue to study. It's human behavior and how to build relationships, especially as a marketer. That's really important to me. And what you touched on as far as the vulnerability part, that is huge. I think people, when they can display their vulnerability, it's not weakness. And in fact, I think it's quite the opposite.
Right.
You've got to be pretty comfortable with yourself to be uncomfortable openly with other people and
Yep.
say, hey, I'm not entirely sure about that one. I'm not the expert on this piece right here, maybe, but to be able to do that, I think actually adds trust to the equation for you, especially when you're pitching to a sophisticated investor. They don't. I know this, I'm sure you know this as well. Like they don't like people generally who seem to know it all, right?
Right.
Everyone knows that everyone is flawed in some way, and you don't know everything.
Right.
You just can't, right? And so I think it's a vote of confidence if you're able to be vulnerable like that, especially in the capital raising space, and that also allows you as the raiser to open up that communication, or I'm sorry, that connection pathway
Right.
with like the investor, because now we're mutually vulnerable in a way,
Mm-hmm.
because the investor is vulnerable, obviously, but he's the investor, they're putting in the money, so on and so forth. But now I am as well, and at least in this situation, it's mutual now, you know,
Exactly.
and that
It's
helps
interesting.
in the connection.
It's interesting you bring up sociology. So I've managed hundreds of capital raising people, whether you call them wholesalers or whatever, capital raising individuals, whatever title you want to give them. I've managed hundreds of them.
Yeah.
And I'm always stressing with the teams that I've had the privilege to manage to say, hey, make sure that you are continually educating yourself. You continue keeping up. And it's amazing. Almost everyone, and I would say in the 90 odd percentile, right? When I say that, what do? They grab the Warren Buffett books, if you use it, or the Dalio Principles book, or they learn about the private equity structures and private credit this and real estate that. That's their and I periodically will come by and drop down a sociology book on them, or
Yeah.
I'll drop down a book on Maslow's hierarchy of needs, or I'll talk about habits, and I'll drop off a book about habits, or another book that I like about finding your optimal performance and how to generate optimal performance in a given day and how to take breaks. And so I sprinkle those in because to me, um, my belief in regards to capital raise is that you should already be the smartest guy in the room when it comes to your product, right? In the industry in which you're in,
Yeah.
you should really be some of the top. In
Yeah.
your product, you should be the smartest person in the room. There
Yes.
should nobody be smarter than you with your own product. You
Yep.
should know that term sheet front and back. You should know if there's a PPM or a prospectus or whatever the documents are. You should know those back and forth. You should know the sub docs and all that. To me, that's level set. That's the
Mm.
basic of where
Yeah,
you should be,
for
right?
sure.
And so when someone starts, when they kind of are honing there, I say, you got to take your game to the next level, which is understanding the basics of people's needs. Because at the end of the day, when we're raising capital, we're still talking to humans.
Exactly.
It could be a CIO of a pension fund. It could be a family office. It could be a foundation, and they're all going to have different motivations and they're going to all have different desires. But at the end of the day, they're people, and people need, the belief of the love, the Maslow's, the
Yeah.
basics of, okay, I need food and water, da da da, and then the next level, and we need that. And so when I stopped trying to force a subject matter on people, but when I started to deliver my features and benefits and the things that I'm doing in a way that satisfies at the core their needs as a human, and then how it relates to their business and how it relates to a company, and
Yep.
then it became a whole different ballgame because we connected on such a different level, as a human level, and that we're in this thing together,
Yep.
and I'm a champion of them and they're a champion of me.
Yep.
Now all of a sudden it was a different ball game. And I'm not saying that it made capital raising easier, because it was never easy, but I wasn't certainly killing myself with barriers that I never thought I would, that I didn't even think I was throwing up,
Yeah.
because there's these barriers that you put in front by not understanding that you're dealing with human, and they got to be vulnerable and you got to be vulnerable, and for there that creates the connection.
Have you ever had an experience where the product or the fund or whatever the asset was not in alignment with the investor or the buyer or whoever it was on the other side?
Yeah, I will say 80 to 90% of the time.
Yeah.
Um, the
Yeah.
reality, okay, so I have a philosophy on this, and I say this often to people. I am not a fan of trying to preach to the unconverted. I'm not. My job isn't to try to convert you.
Yeah.
I'm not a PE fan. Well, let me tell you why you should be a PE fan. Like, I just don't have the desire to do that, nor the time, nor the inclination, right?
Yeah.
So one, I think by it helps now with tools, the AI tools and things like that. I can better find those that play in the sandbox that I'm playing in.
Yeah.
And so let me at least focus on that, because why try to spend my time and energy to convince somebody of
Yeah.
something
Yeah.
when it's going to take me far longer versus talking to somebody who already is playing in my sandbox, and now I get to narrow that conversation down.
Yeah.
So
Yeah.
again, to answer your question, majority of the people will never buy your product. I mean, that's just there's
Yep.
millions of people
Yep.
out there.
Right.
So the majority are not going to. So don't try to make this your personal mission to say, I'm going to convince everybody to buy. No, first find your sandbox, understand those who like to play in that sandbox, and then go to them and start talking to them about why it is that they should talk to you and give your product or service a look see.
Yeah. That's definitely I think that's where a lot of folks raising capital miss, and they will try to convince somebody that their product or their fund or whatever it is they're doing is exactly what they need when it's absolutely not what they need for sure. I run into that all the time, and people approach me on a fairly regular basis to ask about raising capital, and they may send me some collateral around it. They may have a deck. Hopefully, they have one. They may even have the one page, but then they don't really have a specific type of investor they're looking for.
Mm-hmm.
It's like anyone with capital. You know what I
Yeah,
mean?
yeah,
And that's the probably the number one thing every marketer hates is when you're all things to all people.
right,
And I know Richard Wilson talks about that a lot as well. Like in the workshop that we were in, it's like being the very specific type of medicine for that particular pain. You don't want
sure,
generalized pain medicine for a knee pain, or whatever.
right, right,
And I think that's where a lot of folks raising capital miss. To your point, it's about identifying your sandbox and then playing in that sandbox and finding all the people within it as
right.
well, and then
I've
providing
been
that.
very For years I've been very tempted. So I very much focus in on the secondary market for life insurance, longevity oriented assets. It's something that I know. I know it very, very well. I've built products on there. I've raised billions of dollars in capital for this product on both sides. There's you can count on these two hands the number of people that have my experience in this specific asset class. But it's a very small asset class, and I understand that.
Yeah.
I don't
As
try
it,
to
as it
compete
should be.
against. Yeah, I don't try to compete with the bigger boys. But the reality is, I keep going back to, but I know this niche. And so I'm going to stick in this sandbox and I'm going to find people that are interested in this and
Yeah.
then talk to them about why the things that I have seen are things that they should be taking a look at versus trying to spread myself out and trying to do many different things. It just are spread too thin, to your point, and
Yeah.
you don't get the focus in. So it is so I come across people all the time that are not interested. You're going to, you
Yeah.
know, and you just got to say, okay, well, I respect that. Have a great day. If there's anything I can do for you, let me know. Otherwise, I'm going to go spend my time with those that that I am preaching to the choir, that they
Yeah.
are. And then that leads into the next thing, which is I think it's such a critical part. First and foremost, uh, if a company does not have a product or service that has an appropriate risk reward factor for what it is that they're asking that investor to put in, and it's scary to me that in 2025, I still see products out there in which the issuer is putting all of the risk on the investor. And I just look at him, I go, what are you doing, man? Like, it's 2025. There's there's tens of hundreds of thousands of investments out there. You think, like, people are smart now. It's not hard to figure this stuff out. If your
Yeah.
risk reward is, you can't just tell me, well, you're good at sales, so just go sell it. Well, no. I'm not going to sell an unneeded or an unwanted product, or one that doesn't have a proper risk reward factor.
Yeah.
I'm just not going to do it.
Yeah.
And it sounds strange, but you have to start off with that premise in mind. If you're a company that's wanting to raise capital, there's got to be an appropriate risk reward for that investor, or else you're not going to, even people who are playing in your sandbox are not going to come to you if
Yeah.
you're skewing it so bad where they're taking the risk.
That's usually what it is too. I'd say it's usually 99% a risk, or it's skewed in that way where the risk is on the investor versus the sponsor.
Right.
You know,
Right.
yeah,
And I
I
mean,
think,
we get it. Investment is risk, right? There is elements of risk when we're doing some investments, but when it's skewed so much
yeah,
that it's clear, nowadays the market is not, to be fair, I'm not a short-term capital raise guy. I'm a longer term relationship person. I may have shorter durations of raising capital, but I'm going back to those markets all the time. So to me, I'm doing a longer relationship. So I'm not saying that there aren't ways to do short term stuff that one hits and they're out of there. That's just not my style, or what I'm comfortable in doing. I want to maintain the relationships and keep going.
well, it's funny you said, like, to your point too. Whenever there's that outsized risk, you need to make up for it with a really strong relationship. That's the only way I'm thinking you can overcome that. And it's usually the opposite in real life, where people go in with a complete cold relationship. They don't know the other person, expecting them to just accept all of the risk, and the sponsor has basically none of it. It's like, if
Right.
you're going to ask for that kind of a risk reward profile, or that ratio where it's offset and there's more risk on it, you need to really, really, really have a strong relationship in order to get it from them. That's almost like if you were
Right.
going to ask for investment from your family,
Right. Yeah.
then it can be outsized risk maybe, and you might get away with it. But if
Yeah,
it's
you
not,
might.
this is not going to work. But
Absolutely.
yeah, I think you're on point with that as well. Going for a longer term approach on your relationships that's the smart play right there.
Yeah.
You don't necessarily need to be able to raise capital from everyone. You need to be able to raise it from maybe a few people and just work with them and build a relationship, especially once you've gotten it
Right.
once or twice. I don't know why you would change it, to be honest with you.
Yeah. Or else you have built the relationships. So therefore, when you have something, not all of your relationships are going to buy into this one. It may not fit their profile or that given time, but that's okay, because they understand that, hey, that might be a good deal, but it's not right for us right now, but that's okay.
Right.
Then we come back to them with the next one, and we come back with the next one, and just keep going as we build that relationship. I mean, that's just the nature, of the business.
Yep, it is. So let's close with this. Is there a maybe one or two experiences you've had that were the hardest raises you've had? Maybe one or two of them.
Sure. So I'll tell you where we had the most difficult capital raise. Number one, and of course, I'm not going to say names, and we
Sure.
just be respectful of those things.
Yep.
But number one, it turned out it wasn't a priority for the company doing the capital raise. So, in other words, if you are treating a project as a side of the desk project, you're going to get side of the desk results. If it's not a priority for your organization, it will be abundantly clear to the team that you've asked to go out and do it. It will be abundantly clear to those doing due diligence on you and underwriting you and determining if they're going to invest in you, if this isn't a priority. So I have had, nightmares where it wasn't a priority, and therefore Well, if it happens, it happens. If it doesn't, it doesn't. Because what happened from that? Number one, uh, my biggest pet peeve, and I can't believe I have to keep saying this in 2025, but communication still is horrendous in our industry. It
Yeah.
is horrendous. And
Yeah.
and if you're not communicating well internally within your own organization, what makes you think they're going to communicate well to the investor and they're going to provide a great experience to the investor? It's just not going to happen.
Yeah.
But to this day, I still get where I send stuff out and I have to follow up 4, 5, 6 times internally. These are
Yeah.
people that I'm supposed to be like teammates with. So that's what happens because it's a side of the desk project. So I'm not going to respond to them right away because I've got other things. That translated into the systems weren't there. The systems weren't there. Now, we all know these people created ideas, created products, created structures because they're really good at that. Where they miss a lot of times is then they have the systems in between to manage all that. Proper CRM systems, proper, portals for your investors and all that kind of stuff. It was a side of the desk product, so we got a side of the desk systems,
Yeah.
right? And so then that started to fall apart because you weren't getting a good experience. And then the team that was being tasked, we as the team out there, were getting side of the desk marketing materials, not focused really on what we needed. Well, just use this and that'll just make it work and make it. No, that's not how. But when it's a low priority, caused us to have marketing materials not targeted, not saying the right message, not delivering what we needed to deliver. And that actually translated then into compensation. And so therefore we couldn't compensate our team properly because they didn't want to allocate. And
Yeah.
so so the biggest nightmare that I had started going back to the original of your question, which was I had a company that wasn't committed to capital raising, which created this waterfall of side of the desk results
Yeah.
because you didn't have it at the beginning. When
Yeah.
that happens, that's your nightmare. That's your capital raising nightmare.
I feel like that's 99% of the experiences I've loosely had come toward me. It's like it's always all those things you just said. It's like they don't have the marketing materials in place, they don't have the team in place, they don't have the presentation in place, the skills, the documents, the systems, all of it. And it's like they're just completely unprepared. I can see it
Right.
immediately. And I'm
Yeah.
not even a professional investor. So what do you think a professional investor is going to see? They're going to sniff that out immediately. That's why I don't even approach people in my network
Right.
that I know that could invest in it. It's like, no way. Because then they're going to look at me like, why did you even bring this to me?
And that
It's like,
all stems from it wasn't a priority for them. It
yes.
just wasn't. And if it's not okay, then understand that. And
Yeah.
understand that this is what you're going to get subpar results
Yep.
when you give a subpar, priority relative to that capital raise.
That is huge. I mean, that is the thing. That is the thing.
Mm-hmm.
I wish more sponsors would really take it seriously and actually invest time, energy, effort, planning, and money into that thing before they start trying to raise capital for that thing. Matthew, I appreciate this, man. These are fabulous insights I think we've gone through, and I hope that people that are watching take it to heart and can glean several notes out of this kind of stuff. I think this is how you've raised so many billions of dollars as these things here. And I think it's really surprising. I think people watching will find it surprising as well that, some of the things you talked about, particularly like sociology, it's like, that's something that would probably
Right.
never enter into the equation at all. And
Right.
it's probably, in my opinion, I'm going to say that's 99%, maybe
Right.
95% of the game right there is your sociology and how you're going to
We
approach it.
we didn't talk about, oh, you got to learn this product better, or we didn't talk about all that kind of stuff. We talked about all the things outside of that
Yeah.
that framed it out so that when it's time to talk about the product, you have all the elements
Yep.
already covered. And that to me that is a recipe for long-term capital raising success, versus those that attempt to do it. And you're not going to attract the best capital raising people because they're going to spot that.
Yep.
And I am a firm believer, and I fully admit this, that I hire A team members. I'm not interested in the B team or the C team or the D team. I'm just not. I don't want to waste my clients' time. I don't want to waste my time. So I'm only going to go after capital raising people to help me on my team are the A teams. Well, they are good for a reason. And if your company isn't set up to support that, you're not going to attract them. They're going to go
Yep.
somewhere else.
It's
And that's the key.
it's all about the time you spent before the 6 minutes on the field.
Right. And after. And after.
And after. That's right. I
Yep,
like it.
absolutely.
Matt, thank you for your time, man. Thank you for this insights or all of these insights. Those of you watching, I hope you got a lot out of this. I know I did. And if you want to check out more behind the deal, just find me and connect on YouTube and my LinkedIn channel. Thank you guys so much. And thank you, Matt.
Thank you.